you have to think about what's your plan, not anybody else's plan. So many times we're following somebody else's advice, but we're forgetting about like what is our actual want, right? So, okay, you want cash flow projects, don't invest in development projects. If you want to just build up your net worth, okay, look at areas that could serve to give you the best upside potential, right? Don't focus on anybody else's goals, focus on your goals. And if you don't know your goals, then you shouldn't be investing yet. And so you can think about a clear outline of what your goals should be.
Today, we're joined with Jason Yarusi. Jason is a co-founder of Yarusi Holdings and has acquired over 2,300 real estate units since 2017. He hosts a Multifamily Live podcast and leads a multifamily investing club, lives in Tennessee with the family. Jason, we're excited to have you here today. If you could let the listeners know a little bit more about yourself.
Yeah, sure. So Jason Yarusi down here in Tennessee. I grew up in New Jersey, lived in New York City for about a decade back in the early 2000s. Came from really the restaurant space. I left college with a finance degree, moved in a lot of different directions and started working as a bartender. So I did that for a number of years, scaling up to own restaurants. I owned and opened a bar, opened a brewery for which I sold at a point. And then early 2000s, right, 2010, 11, my dad had worked in the construction industry, had his own construction business for better parts of about 50 years. He just retired last year. He lives and moves homes. That's what he had done. He had this unique business out in New Jersey. He lived and moved to homes, and Hurricane Sandy happened, decimated the East Coast, destroyed hundreds and hundreds of thousands of homes. My dad's business, doing 10, 11, 12 jobs a year, his phone explodes, gets 1,000 calls a day overnight. And I'm working, running my bar, doing all those things in New York City. And my little brother working for me at the time, and my now wife, Pili, and I were doing that. We moved out to New Jersey to help dad really just keep up with this just crazy onslaught of business that happened. So I continued to go in these trade-offs from one job to another that was really service-oriented. Really put our best foot forward, really helped dad accelerate. Went from those 12 jobs a year, give or take, to about 250 a year, did about 2,000 of these projects over the next couple of years. With that, we kept asking the question, okay, like what else is there, right? Like a lot of us do. Pili, now becoming my wife, she's pregnant with our first kid. We came upon the word real estate, right? A lot of us do. We come upon the word real estate. And however, with real estate, there's just so many options, you could do everything from, tax liens, flipping, wholesaling, Airbnbs, long distance rentals, and apartment investing. Well, we did what we thought was logical. Pili, here pregnant, goes out and gets a real estate license. We start doing these very, very intricate flips. We were lifting up homes. We were adding square footage to the homes, almost doubling the value, which in New Jersey speaks a lot based on where you can resell these homes. However, they were long processes, right? So we were exposed for a number of months, really intricate processes, and we were doubling over all the construction work, now busy with this real estate work, where our goal was we wanted to get back time so we could really control our day. We've never really had that in our life. We were always doing these jobs. We had to show up at a bar, work for a number of hours, go do these construction jobs, right? So you would do those jobs, and if you didn't do them, you wouldn't get paid. So we kept asking those questions. What else is there? We're trying to get our day and our life back so we could really explore having family life. And with that, we kept adding on all these activities. And although we were doing good with the real estate projects, we were going further and further away from that choice of wanting to get our time back. So we kept asking that question, what else is there, right? And it led us to Pili meeting someone at a real estate event who was doing out-of-state rentals. And that was that peak of curiosity where we jumped in, right? We brought some 2 families, some 3 families. And what that allowed us to do is it forced us from us actually doing the part of the process to have to empower others to go out there and be part of our team, to go out there and do everything from the renovations to the leasing to the property management. And lo and behold, we started having rent checks show up. So that was that glimpse of us finding a way to be able to set up others to live their best life, to do their best things, while we could go out there and control the operations of the project. However, it was quickly understood that it just wasn't going to be scalable, right? Having a bunch of duplexes, 50, 60 duplexes 1,000 miles away just didn't seem like it made sense. So we kept asking that question, what else is there? And I came upon someone doing large apartment investing. And that was that aha moment where I said, okay, I get it, right? I've had very small 12-seat restaurants. I've had 100-seat restaurants. It's the same business plan, same part of the process. It all just comes down to your mentality and how you can use economies of scale. So we sold off those 2 and 3 units, dove all in to be able to go fully into the know of just learning how to do these apartment buildings. And we learned at first something called syndication. put together our team's processes, started looking in certain very select markets, and brought our first 94 unit. That was back in May of 2017. Since then, we've done about 30 transactions, almost 300 million in real estate with properties in 6 states currently, for which, everything, 90% of them in place multifamily. There are 10% are everything from self-storage to some office and some development.
Wow, that's an incredible journey, and I love how you put the pieces together, starting from fix and flips all the way through to now you've got a massive portfolio, and the road it took you to get there. You've overcome a lot of disparities and just going out and getting it. So there's something called the 100-mile mindset. Can you touch on that a little bit for us?
Sure. Yeah. The show is short, right? So I could go on for stories for days, right? But a lot of this is that, we either have reasons or results, right? We can tell ourselves reasons for why we don't get what we want, or we can find a way to get results. And with myself, I started running marathons right up to 2009, right? First one was New York City Marathon. Came out of school playing sports, grew up playing sports. And as you find, your friends, they get busy with life, their jobs, doing all these other things, and you don't get together to play football, basketball. So I started doing something I just never did, and that was long distance running. So I did what I knew, and that was marathons. Well, coming into 2017, 2018, I came upon the world of ultra marathoning. That can be anything basically above marathon level, 26.2 miles. But what I came upon was a 100-mile race. And I just always have said that, if I don't have the answers, it's because I haven't found how to ask the right question. So I kept saying to myself, like, how am I going to run this 100-mile race? It just seems like impossible. And if you think about it, that's like a lot with our goals, right? We set up these big goals, but we never get started because we think of them as impossible. It could be anything like, I want this mansion. I want to meet that special someone. I just want to change jobs. I want to start eating right. I want to think about anything you're doing is that you set the goal as the one piece of the puzzle. We forget about the journey to get there. So when you do a marathon, you will set up a course of action where you will have maybe 12 or 16 weeks of training. Across those, you'll build yourself up to be ready for that race with really, 2 weeks before the race, you'll probably do some 20-mile runs to get yourself accustomed to this long distance running. Well, looking at this 100-mile race, I was like, well, I'm not going to do like 2 80-mile races like a week out from the race. So like, what else is there? And what has come upon, and I actually heard something today that speaks to this a lot, the serenity prayer, where if you think about your life, we spend a lot of times focused on things that we can't control. But when you get back to focus on things that you can control, your life becomes that much better, because now you understand that everything's happening in your day. You can change or you can adjust, that you can either, take it as it is, or you can make it better. So I didn't know how to control getting ready for a 100-mile race. I'd never done it. And if I started a 100-mile race and I took that first step, and I'd be like, man, only 99.9 miles to go. And I'd be like, well, might as well just give up now. Like, where am I going to go? Right. And that's a lot. Like when we think about our goals, the same thing happens, right? We focus on this big goal. I want to climb Mount Kilimanjaro, right? I want to travel the world. I want to, start this new business, right? But the idea is so foreign from anything that we do that we forget. The only thing we can do is controlling. And that first thing is controlling, taking that first step. So I kept asking, like, what can I do to prepare for this race? Well, I said, I'm going to get up every day for the next year and run 6 miles, no matter what. If it's freezing out, running. If it's a million degrees out, running. If my ear hurts, no problem. I'm running 6 miles today. I'm going to do it first thing in the morning when it's dark. My ear hurts and my nose hurts. If I'm, not feeling well, if you just name it, I'm going to run 6 miles. And I did that for the course of the year. So when I got to this race, I dove in for this race and started saying, okay, I don't know how to run 100 miles, but I know how to run 6 miles. So let's run 6 miles, get to that first aid station, and then, figure it out from there. So I got to that first aid station. Okay, well, let's just run another 6 miles and see where it takes us. So I did another 6 miles, and then another 6 miles to the next aid station, then another 6 miles. And they say the first 50 miles is your legs. The last 50 miles of a 100-mile race is your mind. And that's most of us throughout our creative journey to get where we want with our goals, is that our mind stops us. So as I got further and further into this race, it might not be 6 miles to the next aid station. It might be, can I run another 500 steps? Can I run another 200 steps? Can I just run to that tunnel? And if I don't want to do it, can I just run to the next spot and figure it out from there and see if I don't want to run? If I'm good when I get there, well, okay, then I'll stop. But upon our journey, if we just take action, start really putting together the pieces, one foot in front of the other, we find that we get ourselves away from stopping because we've already started. And lo and behold, I run 200 feet, I run through the bridge, I run to the tree. And next thing I know, I'm at 100 miles, run in a consecutive series of 6-mile races that's gotten me to where I want and upon my goal, because I've spent the time focused on the journey and not scared myself from the ledge because the goal was so outlandish that I never could get started.
Yeah, that's very cool. It's just take everything in bite-sized pieces and baby steps, and you'll eventually get there. So on your journey through real estate, let's just hypothetically say that everything's gone, everything's taken away. How would you start over, knowing what you now know with all your skill sets? You keep your skill sets, but you're going to start over. What would be your steps?
Honestly, like, that's easy, because where we get lost starting is we forget the focus. And the world has put so much emphasis on, having all these different lines of income streams, or just having like the swipe theory here, where you're just swiping to the next good idea, next good idea, next good idea, next good idea. We never actually take the time to let things marinate, right? It's like planting a seed today and expecting to have fruit tomorrow. Where I had good advice was, focus on one thing. So we put the blinders on with multifamily real estate, and we focused on one market, because you can win in any market. And there's people in any market you're in today that are winning, right? You think of some markets that are deemed difficult. There's people in that market winning, but people will jump into a market and say, oh, 2 days later, oh, it must not be right for me. Oh, I read some U-Haul report that all the people are moving to the Southwest, or look at this economic report, I better move to this market or stay away from this market. And you jump ship before you actually put in the work. And on the other side of it, there's someone that's staying there, staying focused, learning the market, not only learn the market, learning the neighborhoods, learning where new construction is happening, learning where the path of progress is, learning where the growth is, learning where the jobs are coming on. And they're going to crush you in every market because they're just in that market focused. So the key piece I would do is I would create a plan to be very dialed in, right? When I first started investing in Louisville, we didn't invest everywhere, right? We said, I'm going to buy 75 to 150 units, BC assets built between 1970 and 2000, valued between 3 and 7 million, solely in the south side of Louisville. Now, you could say, oh, that's going to eliminate a lot of opportunity for you. But no, it got me to the right opportunity. Instead of looking at 100 things for which I didn't know how to analyze, I focused on exactly what I wanted to, and allowed me to really be the specialist in that area. So when something like that came up, I was the guy who would get the call, because they knew that if it was in the East, I would say no. If it was downtown, I would say no. If it's 12 units, I would say no. If it was new construction, I would say no. But if it was an 80 unit or a 94 unit in the south side of Louisville, I was all in. I knew how it operated. I had the team that was specific to know how to run that property for me and with me, the right lenders, the right property managers. So I was dialed in. So the key piece here is that focus gets you to your goals a lot more than jumping ship every time adversity comes up.
South Louisville's certainly was a path of progress. There's a lot of commerce happening in south of Louisville.
Yeah, I've moved out now. So I had acquired probably close to about 500 or so units, between 2017, 2020. We've exited on all those properties. We haven't gone back at this time, not anything against this. We've just moved to different markets.
Yeah. Ford plant opened up. I mean, you were right there with before it was path of progress. So you must have exited right as it was in motion. That's cool. It's very cool. So during your career, what would be the best financial advice that you've ever received throughout your lifetime in real estate?
You have to think about what's your plan, not anybody else's plan. So many times we're following somebody else's advice, but we're forgetting about, like, what is our actual want, right? So, okay, you want cash flow projects, don't invest in development projects. If you want to just build up your net worth, okay, look at areas that could serve to give you the best upside potential, right? Don't focus on anybody else's goals, focus on your goals. And if you don't know your goals, then you shouldn't be investing yet. And so you can think about a clear outline of what your goals should be. And it simply comes out to, where are you on the economic cycle, right? If you honestly are not making enough money to invest, well, you should find out how to make more money. If you are making some money, have you put money away so you have this for a rainy day, or you have things set aside for things that just come up in life? Okay, if you're ready to invest, is this money that you can put aside and not have to worry about for the next 12 months, 36 months, 64 months, 10 years, right? So you have to think about where you're on in that investing cycle. So you can think about, what should my investment plan be, and what benefits am I looking for, right? If I'm looking for the cash flow, or am I looking for, tax advantages, like, where can that serve me, so I can think about where I should place my investments.
Nice. Very cool. What would be the biggest lesson that you've learned from your real estate career?
You know, you have to look at some ways. If you believe there is the potential for something to work or the opportunity, it comes down that you have to find the right people to assist you with that journey. So many times we stop at the first no, when the first no, in fact, it comes from two ways. Either someone doesn't want to be bothered or they don't know, right? So if you believe there's a yes to the theory or a yes to your thought about how you can improve the property, the area, you name it, it's because you haven't found either the right person or right way to ask the question. So you need to say that the answer is not what I'm seeking. I'm seeking really the right people to have on my team or to learn the right question. Most of where I've come short is that it's not the answer that, oh, I didn't get the answer, so it must be not out there. It's because I didn't understand how to ask the question correctly or that the question even existed, right? And that's lots of times is that you come to these things, you go, man, like that's incredible. So be open to really not having to know anything, but understanding that you're there to learn and to put in simple practices where it can be boring and repeatable. So you can have a plan that not only works for you and your properties, but also can be addressed and put out to your investors so they can understand your business plan.
Got it. I know you all are big in asset management, and you have to be. You have to constantly keep your foot on the pedal and poke to make sure the properties are performing. What are some things with your experience on asset management that you wish you knew before, but now know, and you would do different on the next acquisition?
We've always been strong on the construction side, but you just have to. It's something I don't know if it's something that maybe like I didn't know to come in there, but you have to be realistic with your time frames. And I get back to our construction projects is that my dad's incredible. He knows how to do any job, but he's overzealous in how quickly he thinks things could happen, especially in a big real estate project, because you want something to happen in that part, and we do too. So what I see as something that happens from a lot of people is that they get too ahead, saying, "Oh, I'm going to do this business plan. It's going to take this amount of time. It's all going to work perfect," without putting in the part that things take time. Right? There's leases, right? So if you go into a property with leases and you think you're going to turn over the entire property, within 6 months, it's 100 units. Well, you might not even have, half the leases come exposed for you to be able to take advantage of that until the third or fourth quarter. So you have to think about your business plan, the time to put that in the process, but then the other pieces, right? Okay, say you can turn 10 units a month. Fantastic. Can you lease 10 units a month? Right? And at new lease rates that are new market rates, can the market absorb that many units coming on board? So you have to be realistic with your time frame, look at your exposure, how your marketing would need to keep up to be able to lease that number of units. Can the market take it? And with your property itself, those first units you put on board, if it's a poorly performing property you're taking on here, the first 10 tenants might not pay you that market rate because they might be saying, well, why am I going to pay you market rate? This property is not that great yet. You're making it great, but you might have to be more realistic with your business plan coming into it.
Yeah, and then the new tenants are dealing with the old tenants that you're also trying to expel out. So it's you're changing communities, and at the same time, it's like in the middle of chaos, so to speak. I totally resonate with that. It's being patient too. I mean, new market rate rents, you'll get them as long as you're patient, not just stick anyone in there that essentially you're going to have to evict or chase down for rent every month over and over.
Yeah. And that speaks a lot to this is that, these investments are not something overnight. It's not like a wholesale where you're going to be in and out. Most of business plans are a couple of years, right? 3, 5, 7, 10 years, right? Your business plan is. So you want to look at it and say, okay, am I with the right team, right? If you're thinking as a passive investor, are you with an operator that's going to stick in there, right? That understands this is not something to jump into for quick money, right? So if you look, an easy thing, you look in our Facebook page and in the last 6 months, they've been everything from Forex to crypto to open up, a coffee shop to all these other points. Like they're moving a lot of pieces. It may not talk to their longevity of where they are to understand that this is a long-term project. It's not that, you're going in there and the house is vacant. You can just flip the whole house, right? Things take time. You could be 6 months, you could be 3 years, depending on the repositioning plan for the property.
Yeah. It's patient and get it done. But at the end, it's it'll bear fruits as long as you've done it the best of your ability and the market plays out. I mean, you're increasing rent, you're changing communities, you're renovating things. I mean, you're ultimately increasing the value of the property through sweat equity and just time. What are your thoughts on the debt markets right now?
You have to move with the tide, right? Of course, we can't predict. No one's thinking that interest rates would fly where they are, but you have to look at like where you should be in this market and honestly where your thoughts are about where the market's going to go. I think we're going to have a massive drop off in rates? Not yet, but I think we're going to cool off and we'll part. So I've been putting on a lot of bank debt, right? So a 5-year fixed rate, something that doesn't have a very prohibitive back end prepayment penalty. So one, if the market stays hot, right, and then, rates keep going up and, things just stay, or they even just stay even keel, I have a fixed rate for 5 years. So now I can just lock in, right? I can go out there, do my business plan. I'll have a lot of back end energy of, rates floating on me or just, rates moving out of control. However, if the market turns in our favor, we start to see a lot more aggressive lending terms compared to where we stand today. Well, then I can move out. I can capitalize on the market. I can change up, maybe, refi, whether it's just a rate refi and bring my rate down or just change up terms to put a different loan product that now speaks to the time onto the property. So you constantly have to have your head in the swivel and just talk to a number of lenders, because you can have apple for apple lenders where one lender just decides that they're just not lending for this time frame, right? So you have to continue to really put yourself into the market, understand really from a lender side, what are they looking for? What kind of projects are going to meet their needs? Because the same lender you're working with 24 months ago might be off the table right now.
Where are you all at with your capital raises, just as far as new projects?
And are we actively doing them, or what doing to part?
Just as far as nurturing your investors and bringing new projects in, and right now it's tougher for LP capital to place it from.
You're always going to be in two sides, right? It's either where we just were, right, where money was everywhere, but projects were really hard to come by, right? Now projects are easier to come by, but money's hard, right? You're always going to be on two sides. It's never going to be a perfect equilibrium or perfect balance, right? So now we are finding opportunities, but it's been more people on the other side that are just not into the investing stage right now. However, we're still closing properties that fit our need. We just closed on a 210 unit storage unit here east of Nashville. Was built 2 years ago. Prior to that, we just closed on a 65 unit. So we're still raising capital and putting capital's money to work. We've also had 14 exits now. We just had another one. We just gave back investors money, so they're ready to get back, put that money to work. So, but it's going to be time for everybody, right? We don't want investors, we don't want them to be forced to invest. We want to get back to say, okay, if this is right for you, here's a project we have. Continue to educate them so they can be in the know for when and how it can benefit them. So we're still raising, we're still doing deals, we're still closing out deals, we're still moving forward with our business plan. But again, we're putting on debt that's going to fit the need. We're not taking on ones right now that have, floating rate bridge or other things that are going to expose us to the short term. We're putting on fixed rate where we have time to our side, where we can make adjustments over the course of 5 to 7 years.
Nice. Very cool. So for listeners listening in right now, they're looking to get into real estate. They're trying to connect the dots, learn terminology. How would you recommend that they start learning more information? What path would you recommend that they take?
Hey, they're on this podcast right now. Listen more to your podcast, right? So get on your podcast, listen more, but pick one space. You don't know what you don't know. You don't know what you don't like, but pick one space and just try it out, right? Even if it's just, you don't want to go buy a flip, well, go work for someone, just offer your time for a week. Just see if you even like the part or the space of real estate. Where you get stuck is going to RIAs, and they're great, right? You meet a lot of people, but every month, every week, it's something different, right? You're just on this constant, revolving wheel of new ideas, right? And you never get started because everything sounds good. Well, try something. Just try something. Because what's the worst thing that happens? Oh, I hate that. Fantastic. Now you know not to do that anymore. Okay, go do the next thing, right? Maybe it's the third or fourth thing you hit it. You're like, this is sweet. I like this. Or you're like, you know what? This real estate thing's not for me. Cool. At least you got it out of the way. But don't sit on the sidelines. I'm constantly in learning mode. I'm going to die in learning mode. Doesn't matter. I'm never going to learn enough. I'm going to continue to learn. So there's never going to be this part where you're like, today I read my 614th book and I'm ready. You got to go out there, take the action steps based on what you've learned to understand how you can put it to work, because that's going to uncover new questions for you to get better answers.
Yeah, that's connecting the dots along the way. It's a journey there, that's for sure. What are some books that you could recommend?
So let's see what's been on the topic later. Go Giver, of course, is always a good book. I was reading Gary Vee's 12 steps, right? I was reading that recently. Man, you put me on a spot because I got a lot of things. My wife always loves the one thing. The one thing speaks a lot to it is that she loves Unfocused too. David Goggins books are killer right there as you get out of the niche. The one, what's his name? Andy Frisella's partner in his mastermind there. The one is good, but a lot of it just speaks to clarity in your mission, but it's not the aggregate of how many books you can read. Like you can read one book or take one idea, but it's putting into action. Right. And that's most where we get lost. We get in a cycle. I read 52 books this year. Okay, cool. But have you used them? Right. That's the bigger piece of the puzzle. Have you used the information? Right. Because that's the key piece of it is if you are going to excel, break your mold, break your patterns, break your habits, build your future by really taking the steps on creating good habits. Well, then, yeah, absolutely. You're going to find value in where you're going, right? They say 45% of your daily activities is based on your habits, right? So repeatable habits. So, 45% of your day is either good habits or bad habits, right? If it's bad habits, half your day is spent doing bad things. Stop, right? Start doing good things, right? Start doing good things and, your life will change.
That's huge. That is huge. Very cool. Awesome. Jason, how can people get a hold of you?
Sure. So we have a lot going on right now in a lot of good ways, a lot happening out there on socials. You can find me at Jason Yarusi, YARUSI across most social channels. I have a new podcast that just dropped, the Live 100 podcast, talking about the action steps that you can take to live your life at a level 100. You also have the Multifamily Live podcast where we talk about multifamily on all topics each and every day. So you can find us across those 3 formats all across the board.
Very cool. Jason, I look forward to following you and we'll certainly talk soon.
Awesome. Thank you so much.
Yes, sir. Bye.